On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. That's the first quarter of 2025 behind us, and if it was anything to go by, we are in for an eventful year. The last 3 months have been punctuated by policy uncertainty, shaky confidence readings, and volatile markets. After cheering a strong victory for Donald Trump at last year's US presidential election, investors have turned much more cautious since his inauguration in January. Trump is a pro-growth, business-friendly leader who wants to reduce taxes and cut regulation. However, his desire to use tariffs to level the international trade landscape could offset many of these positives. This shouldn't come as any great surprise, although markets might have underestimated just how much weakness he is willing to tolerate as he pursues this goal. The S&P 500 index in the US fell 4.6% during the March quarter. That was its biggest fall since 2022, and the high-flying Magnificent Seven group of stocks drove the sell-off. That group declined almost 15%. In contrast, the rest of the market was pretty much unmoved. Other share markets performed better during the March 2025 quarter. European shares were up 5.7%, the UK rose 5%, and emerging market equities added 2.4%. Conservative assets also held their own, with New Zealand fixed income and US Treasury bonds both rising during the quarter. Gold also continued its march higher, surging another 19% to finish the quarter at fresh all-time highs. Local shares fared poorly, with the NZX 50 index down 6.4% during the March quarter. That was its worst 3 months in almost 3 years. Interestingly, most of that weakness came in February amidst disappointing earnings and outlook statements, rather than during March when those trade tensions were rattling global markets. Similar to the US, there were some outsized individual declines that really weighed on the local index. Market heavyweight Fisher & Paykel Healthcare, which has manufacturing facilities in Mexico and sells a lot of products into the US, was down 12.7%, while Spark continued its slump with a 26.1% decline. Infratil ended the quarter 17.6% lower as the US tech sell-off dampened the mood towards its data centres. We also saw a very large capital raising from Ryman Healthcare, and that put added pressure on the local market as investors freed up capital from elsewhere to participate. Looking ahead to the next 3 months, and it doesn't feel like we'll see a let-up in the action. Tariffs will remain in focus, and investors will be monitoring economic activity closely. Global growth has been solid so far, and it's confidence that has tumbled, but the latter will begin to impact the former if consumers and businesses remain downbeat for too long. Central banks will find themselves back in the spotlight over the next few months, with investors anticipating rate cuts to resume in the US, UK, Europe, and Australia. Some policymakers, particularly Jerome Powell at the Federal Reserve, could find themselves in a slightly awkward position as growth slows, but inflation expectations push higher. The picture looks clearer here in New Zealand, with another 25 basis point cut to the OCR seemingly assured next week, and then another one in May. That would see the OCR at 3.25% by the middle of the year, which will be the lowest in 2.5 years and close to what most people consider to be the neutral rate. Corporate earnings will soon be back in the spotlight too, with the US banks set to kick off the quarterly global reporting season late next week. Analysts are upbeat about where profits are headed, with year-on-year earnings growth for the S&P 500 forecast to be 7.3% in the March 2025 quarter. For 2025 overall, analysts expect a healthy 11.5% increase, and that means updates and outlook statements from management teams will be as important as ever. Here at home, the next batch of results are due in May, and that's when we'll see the likes of Mainfreight, Infratil, Ryman Healthcare and Fisher & Paykel Healthcare announce their full-year earnings. Across the Tasman, there's an election coming up this quarter, with Australia set to go to the polls on Saturday the 3rd of May. It's looking tight at the moment, with Anthony Albanese's Labour Party at risk of being the first one-term government since 1931. All in all, it's been a very uncertain start to the year, and this market dynamic is likely to continue in the months ahead. In the 33 corrections that we've seen since 1960, and a correction is a decline of 10% or more, the S&P 500 has avoided a bear market 70% of the time. A bear market is when things fall 20% or more. The average decline on all of those occasions, when a bear market has been avoided, has been a top-to-bottom fall of 14.2%, and that weakness typically lasts about 4 months before you see a recovery take hold. Now, to reach that point, the index would need to fall another 6.1% from where it finished the March quarter. Yes, there could be a bit more weakness to come, although this might be an environment that ultimately throws up some highly attractive opportunities. Investors will need to be on their game though, and willing to sit through more volatility than usual to take advantage of that. Thanks for listening, team. We'll talk again soon.
For more insights, visit craigsip.com.